Dear students, in today's class, we'll solve one more problem on the issue of shares by the company. Your problem is already written on the board. Just we'll go through what is given in the problem. After that, we can pass the necessary entries. Here, just let us see what is given here. X Company Limited registered with an authorized capital of rupees 50 lakhs divided into 50,000 shares of rupees 100 each. This is the information which is given about the authorized capital of the company. What is the authorized capital here? Authorized capital is called as the registered capital. This is the maximum amount of capital which a company can raise or which a company can collect by selling the shares to the public. Here, company is authorized to sell how many shares? 50,000 shares of rupees 100 each. Okay, fine. But now the company has decided to issue 15,000 shares. Out of 50,000 shares, company has planned to sell how many shares? 15,000 shares. Okay, of rupees how much? Rupees 100 each, payable at rupees 20 on application, rupees 30 on allotment, rupees 25 on first call, and rupees 25 as second and final call. It means rupees 100, that is the face value of the share, will be collected by the company in 4 different installments. First one is the application money, next one is allotment money, first call, and next one is second and final call. All the shares were subscribed for and company received applications for 16,000 shares. See, this is very important here. Company's plan is there to sell only 15,000 shares, but it has got the applications for 16,000 shares. It means demand for company's shares is there in the market. But here excess applications are collected by the company for 1,000 shares. The applications received on excess shares were rejected by the board of directors. You know that board of directors have the discretionary power to reject the shares in case if they are not planning to allot. That is why here the demand is there for 16,000 shares. The board of directors or the company is not going to allot 16,000 shares. That is why what the board of directors have done now, here they have rejected the applications of 1,000 shares because they need to allot only how many shares? 15,000 shares. Therefore, out of 16,000 shares, 1,000 shares applications were rejected by the board of directors. The money on all calls was duly received by the company. It means as and when the company demanded the amount from the shareholders, the complete amount was collected. Okay, in this problem, company has asked you to pass the necessary journal entries in 2 different situations. First one is when company maintains separate accounts for share application and share allotment. This part already you have studied because whenever company issues the shares, it maintains a separate account for share application. In the similar way, a separate account for share allotment. But next situation is when the company maintains combined account for share application and share allotment. Sometimes a company may decide to prepare a combined account of share application and share allotment instead of preparing separate accounts because it is meaningful also. Uh, Here allotment and application both are interrelated. Without applications, allotment is meaningless, and if companies objective is not to allot the shares, question of asking to send the applications doesn't arise. That is why here both are interrelated. Because of that reason, here company may maintain a combined account in the name of share application and share allotment. That is why under these 2 different situations, we will pass the journal entries and just try to understand what difference is there. Very simple aspect is there. Just concentrate and try to understand here. Okay, first situation, when company maintains separate accounts for share application and share allotment. Uh, Under that situation, how the journal entries are passed, just you see here. Journal entries, journal entries in the books of company. This is the first situation. Okay, here write debit and credit. Simple journal entries are there. Try to understand here. Okay, in this problem, company has decided to sell how many shares? 15,000 shares. All the shares were subscribed for and the company has collected application money on all the shares, right? But here the second paragraph, what it says, all the shares were subscribed and company received applications for 16,000 shares. It means here share application money is received on 16,000 shares, not 15,000. That is why here on 16,000 shares we have to calculate at rupees how much, what is the amount collected? Rupees 20 on application. Rupees 20 on application. It comes to how much? Rupees 3,20,000. Actually, company's plan was to collect rupees 3 lakh. It means for 15,000 shares, it comes to rupees how much? 3 lakh only at the rate of rupees 20 per share. But here, company has collected how much? Rupees 3 lakh 20,000. 20,000 extra amount is collected by the company because here demand for 1,000 extra shares is there. Here, what the company has done? Whatever the extra amount is collected in the form of application money, company has returned that because the applications received on excess shares were rejected by the board of directors. Therefore, whatever the applications are rejected, on that whatever amount has been collected by the company is required to be returned to them along with the letter of regret. You have already studied this part. Okay, whatever it may be, whenever application money is collected, what journal entry do you pass? Bank account is to be debited and share application account is to be credited. That is why first journal entry I am going to write here, bank account is debited to share application account. Share application account with the amount of rupees how much? 3,20,000. Whatever the actual amount is collected, that we have to write here first. 3,20,000 and 3,20,000 being application money on 16,000 shares at rupees 20 per share received. You know what the company does? Company is going to return the excess application money because here company's decision is to allot only 15,000 shares, not 16,000. Therefore, whatever excess application money has come, that will be returned to the applicants whose applications are rejected. In that case, what journal entry we have to pass? We have to pass the reverse journal entry. Here, share application account is to be debited. Share application account is to be debited to bank account. Cash goes out from the business here. What is the amount? 20,000 extra amount was collected by the company. Therefore, this amount of rupees 20,000 company is returning. What narration do you write? Being excess application money on rejected shares returned. That's it. Rupees 20,000. Next, third one is the application money on 15,000 shares is transferred to share capital account. That time what journal entry is to be passed? Share application account is to be debited. Share application account is to be debited to share capital account. Actual application money which company expected was how much? 3 lakh. After returning excess application money, how much amount remains? 3 lakh. Therefore, that 3 lakh is transferred to share capital account, being share application money, transferred. Where we transferred it? To share capital account. Next, fourth one. Come to the allotment. Whenever allotment money is received, what journal entry is to be passed? Simple thing is bank account to share allotment account. Here share application we have taken, there we have to take share allotment. Okay, bank account is to be debited. Bank account is debited to share allotment account. What is the allotment money here? Per share, the company decided to collect rupees 30. That is why how many shares? 15,000 shares into rupees 30 to calculate, it comes to rupees 4,50,000. Okay, this rupees 4,50,000 is to be taken as allotment money. Rupees 4,50,000 and rupees 4,50,000. Write the narration being share allotment money on 15,000 shares at rupees 30 per share received. Next, fifth one is whatever allotment money is there, actual allotment money, that we transfer to share capital account. That entry you write, share allotment account is debited. Share allotment account is debited with the amount of rupees 4,50,000 to share capital account. To share capital account. Rupees how much? 4,50,000. Next one is write the narration being share allotment money. Here this can also be said that due entry, or when the amount is transferred to capital account, you write share allotment money transferred to share capital account. Or you can also write being share allotment money due 4,50,000. Next, sixth entry is with regard to first call. You see, on first call rupees 25 per share was collected. That is why here how much amount it comes? 15,000 shares into rupees 25 as first call. Therefore, you write here 25 means 5. Next one is 25 on the 25, 27, 37, 3,75,000 we get. 3,75,000 is the first call money. When first call money was collected, journal entry is bank account is to be debited to share first call account. What is the amount? 25 into how much we got? 15,000 shares into rupees 25. 37. 3,75,000. 3,75,000. Here you write 3,75,000. What narration do you write? Being share first call money received. Share first call money received. What is the next journal entry you pass? Whatever the share first call money is there, that is transferred to what? To share capital account. Therefore, I write share first call account. First call account is debited to share capital account. Share capital account. Rupees 3,75,000. Rupees 3,75,000. Simply you write being share first call money transferred to share capital account, or you can also write this one as being share first call money due. This is also called as due entry. This is the seventh entry. Okay. Next one is in the similar way. Second and final call money is also same. Rupees 25 is there. Again, we get how much? Again, we get the same amount, rupees 3,75,000. Therefore, here what is to be done? For the receipt of the cash, you pass the same journal entry. Bank account is debited to share second and final call. What is the first entry? Whenever the cash is received, or whenever the second and final call money was received, journal entry is bank account is to be debited, and next one is share second and final call account is to be credited. And when that amount is transferred to share capital account, what journal entry is to be passed? Share second and final call account is to be debited and to share capital account. This is the way how we have to pass the journal entries under first situation, when company maintains share application and share allotment accounts separately. You see here in the journal entries, share application account we have taken, share application account, Here also share application account. Here you see share allotment account is taken. Here also share allotment account. Means here share application and share allotment account. Both are separate here. And now what we are going to do, we are going to follow the second one. Now, by following the second method, what the company is doing here? Company is maintaining a single account. It is combining application as well as allotment. That is why here, instead of taking share application account or share allotment account, what we have to do here? We have to take a single name, that is share application and share allotment account. That's it. That is the difference. Now you see in the second situation how the journal entries will appear, that we are going to pass now. Journal entries under second situation. Journal entries. Journal entries. Just you see the difference. Very simple thing is that. Okay, write debit and credit amount in rupees. Okay, what is the first journal entry for, when the application money is received? Bank account to share application account. What you need to do now is, you write bank account as it is. When share application money is received, you write bank account is to be debited. Next one is to share application account. But here share application account is not to be taken. How we have to take this one? Share application and share allotment account together. Combined accounts name is to be taken here. To share application and share allotment account. Share allotment account. You take the same amount but change the name of the account. Here only application account was taken. Here we have to take a combined account, share application and share allotment. Only that difference is there. How much? 3,20,000 and 3,20,000. You write the same narration. Being application money received on how many shares? On 16,000 shares at rupees 20 per share. At rupees 20 per share. Right, like this. Same narration. What difference is there? Just you see here in the entry. Here only application account is taken. Here application and share allotment. That difference is there. Next journal entry is, see, whenever excess application money is returned to the shareholders. Here in the problem it was clearly given that some applications were rejected. Hence, whatever excess amount has come as application money is being returned. For that, what journal entry we passed here in the first situation? Share application account is debited with the amount of rupees 20,000 and bank account is credited. But instead of taking share application account, what we are going to take? We are going to take share application and allotment account, because that is the only account which company is maintaining under this method. Okay, you write the journal entry, share application and share allotment account is debited with the amount of rupees 20,000 to bank account. Very simple thing. To bank account. You write the same what you call narration, being excess application money on rejected shares returned. You write the same narration, rupees 20,000 and 20,000. Come to the third one. You see, when the application money is transferred to share capital account, what journal entry is passed? Share application account is debited and share capital account is credited. But here we are going to take the name as share application and allotment. Share application and share allotment account. Allotment account is debited to share capital account. To share capital account. What is the amount? Rupees 3 lakh. Rupees 3 lakh. Same amount, same narration, but only the thing is you change the name of the account. Instead of single account, you have to take the combined one. Here write the same narration, being share application money transferred to share capital account. Come to the fourth one. What is the fourth one? When the allotment money was received. See, when the allotment money was received, we pass the journal entry. Share allotment account is to be debited, right? But instead of share allotment, under this method, what we are doing? We are going to take share application and allotment account. Okay, bank account is to be debited as usual. Next one is to share application and share allotment account. Allotment account. What is the amount here? Rupees 4,50,000. 4,50,000 and rupees 4,50,000. You write being the allotment money received on 15,000 shares at rupees 30 per share. Right, the same narration. Fifth one is when this allotment money is transferred to share capital account, we write here share application and share allotment account is debited to share capital account. Rupees 4,50,000, rupees 4,50,000. Here we are not preparing separate accounts for share application and share allotment. That is why whenever we get the share application money, that time we use share application as well as share allotment. Just you see share application and share allotment account. Here whenever allotment money is received, we don't take only allotment account because here combined account is there. That is why here share application and share allotment account we are going to debit. Next one is about the first call. When the first call money was received, what journal entry is to be passed here? Bank account is to be debited as usual. Bank account is to be debited. What is the amount? 3,75,000. 3,75,000. Next one is to share first call. But remember here, the share application and allotment account, see both are combined, but for the call money, same what you call entries are to be passed here. No other changes will be made here. But in case of call money, same journal entries we have to pass. Bank account is debited to share first call account. First call account, amount rupees 3,75,000. Write the same narration, being first call money was received at rupees 20 or 30, whatever it may be, that you have to take. First call money rupees 25 is there, right? Okay, rupees 25, you write the same narration. Next one is when this call money is transferred to share capital account, what journal entry do you pass? Share first call account is debited to share capital account. Share capital account. Rupees how much? 3,75,000 and rupees 3,75,000. In the similar way, when the second and final call was received, journal entry is bank account is to be debited. 8 journal entry. Bank account is to be debited. What is the amount? Just you have to calculate and write here. To share second and final call account. Final call account. Whatever amount comes, that you have to put here. Next one is when this amount is transferred to share capital account, journal entry is share second and final account is debited and share capital account is to be credited. Okay, students, I hope you understood the concept. If any doubt is there, you can send your comments. Next one is you share this video even to your friends so that they can also get the benefit of this. Okay, thank you.